We got the minutes from the RBA, and again, the RBA, a lovely phrase that the head of rates at HSBC used with Nera and I is le tête du peloton, which is the Aussies and the Kiwis really lead the charge, and they've left the door opening to further easing. And again, this is the language, if not the action, that we can expect more of from global central banks. Is that how we look at the back quarter?
Well, I guess so, but it's not clear, I guess. The Fed has been reluctant to open that door too much, and at the same time trying not to close it. So Powell was really characterizing this rate cut as a mid-cycle adjustment. My view is that he will stick to this approach and will stick to the usual mantra that the Fed will be ready to act as appropriate. But I don't think he's ready to indicate too many further rate cuts, and the dot plot chart is also unlikely to indicate that. So it's really a question of balancing it between ready to act if needed, but we don't think it's needed just now.
Yeah, Christel, we talk about risk management at the Fed. What sort of risk management moves have you been making in the portfolio?
Well, I guess it's risk management moves are basically reducing exposure. So really, towards the end of the summer, we've seen interest rates rallying very sharply, pricing really, over 100 basis point or 100 basis point of rate cuts over 1 year from the Fed. And so we started thinking, yes, the risk of recession have increased, but they're not really, the recession is not just upon us. So we started taking some profit on the rates. And similarly on the credit as well, because the credit is where it is because rates have gone down so sharply. So it's just a question of squaring down a little bit the position, in particular for defensive portfolio, and assessing now where this risk will end up, and central bank actions as well.
Christel, I was obviously caught by your reference to the fully hedged Fed, the language that they're using, that Powell is using. What is a mid-cycle adjustment to you? Because the market, let me just pull up my GTV, the market's saying 2 more rate hikes between now and January of next year. So is a mid-rate cycle cut to you the 3? That would be 1 last month and 2 more to come by January of next year. Are we there and locked and loaded then for the medium term?
Well, I guess it's really anyone's guess. That's the beauty of this phrase. So it's somewhere between three rate cuts, I guess max 4 rate cuts, but probably more 2 to 3, I'd say, in the Fed's language. And indeed, the proof is that they probably will not open to further rate cut just now in the dot plot. So the market has moved a little bit ahead of itself, which is normal. The market is just a probability weighted measure, and risks are out there, and the Fed is just giving us their one best shot. It doesn't mean there are no other scenarios. So let's see from there.